Hello, everybody, and welcome to another episode of Simon Dixon Live, where we're going to be discussing today non-fungible tokens, NFTs, and whether we're in a non-fungible token bubble or an NFT bubble. So just while we're waiting for a few more people to arrive, welcome, everybody. Welcome in the live chat. Remember, we'll be taking questions. We used to take them from the live chat. But now we've migrated over to Slido. No account needed, don't worry about it. Just over to sli.do and enter in the box where there's the hashtag, enter SD6. And that will take you over to the question board, and you can ask your question or you can upvote other questions. If you've got a mobile, you can see at the moment here, and you can scan that QR code if you're on your mobile that's up in front of you right now that Azad is showing. So we're just waiting for a few more people to arrive. As we said, we're going to be discussing non-fungible tokens, NFTs. Welcome everybody to the show. The format is as usual, which is the first half we'll be discussing the topic, and the second half will take as many questions as we can from the good old Slido board. So just while we're waiting to jump in, a couple of announcements. We had a lot of people asking about their accounts that they're trying to open up at banktothefuture.com. For those of you that don't know, that are new to me, I am the CEO and co-founder of banktothefuture.com, and we allow people to build a portfolio of crypto companies and securities and investments in the Bitcoin financial technology space. Some of our more prominent clients that we've brought investment opportunities to in the past include companies like Coinbase and Kraken and Robinhood and Bitfinex and BitStamp and many others, and BitPay. But at the moment, the demand has gone through the roof, and we are really, we've got a waiting list of people to join the platform because so many people have generated so much wealth that there's many more qualifying investors. And so if you are waiting for those accounts, make sure you sign up earlier rather than later because we are experienced. We are truly oversubscribed at the moment, and we need to make sure that there is a waiting list for accounts at the moment as we try and get through them. Also, speaking about waiting lists, many of you have been asking about the next round of Retirement Plan B customers. There's a couple of things you can do. Before the first thing is, if you want to get the free 4-part video series that we released earlier this year, then you can still head over to retirementplanb.com, enter your name and email, and we'll send those videos over to you. And as a reward for watching all those videos, we'll still give you a free digital copy of the book, Bank to the Future, which was the first published book in the world to include Bitcoin, predicted things like the Great Depression of the 1920s and modern monetary theory a decade before they're talked about today, and of course, Bitcoin. And finally, many of you were asking about the next round of people that are joining the Retirement Plan B online coaching program. We had to close the door at 500, and that is coming to a close at the moment. We did an extra 7 weeks. It was meant to be the 7-week online coaching program. We've done over another 7 weeks where we brought in our tax advisors, legal advisors, because we just wanted to deliver more and more value. But if you are looking to get on the waiting list for the next round, we still are working with some of the clients to build their retirement plan Bs. And obviously the value of those portfolios has gone up significantly. Then you can join the waiting list and to get notified at retirementplanb.com/sign_up. All those links should be in the description, and we'll make sure Azad puts them in the live chat. So those are all the different things that you can be involved with for those of you that are looking to build and protect your wealth in the rise of this industry and sector. And so today we're going to be talking about bubbles and non-fungible tokens. So let's jump straight into the topic now. I'm just going to pull up some of my screen shares so that we've got all those. And so firstly, really what the question is what are non-fungible tokens. You probably heard them touted around everywhere on YouTube videos and people talking about how non-fungible tokens are the next big thing. And you've even seen people like Jack Dorsey, the founder of Twitter, auctioning off his very first tweet on Twitter, taken a screenshot of it, pulled up a JPEG, and created a non-fungible token so that people can purchase them. There's many celebrities all around the world that are looking at how they can get involved in the non-fungible token industry and craze. So firstly, what is fungibility? Well, fungibility, this is such a ridiculous name for what NFTs have turned out to be. And non-fungible token is just really a real geeky word. But fungibility is a word that came around when really discussing the properties of money. And so fungibility in its simplest form means that there is no difference between them. And the reason it comes into the money conversation is because if you think about it, a $10 note, in theory, there is no difference between one $10 note and another $10 note, unless they're adding tracking devices and serial codes to them, in which case, when you spend those $10 notes, by adding the tracking device and serial code to it, they become non-fungible. They become and fungible means that there's no difference between them. So fungibility just simply means that you can't differentiate between one or the other. It's one of the properties that was removed when banks were able to create digital currency. Because of the advent of anti-money laundering laws, these anti-money laundering laws were really about making sure that money and digital money is traceable. So it really ties in to central bank digital currencies, digital currency created by a private bank, which is the balance that we see in our online banking, and also fungible forms, more fungible forms of money like cash. It also tied into the Bitcoin conversation because in theory, there is meant to be no difference between one Bitcoin and another Bitcoin, which is why there's always looking to improve fungibility in Bitcoin by making it so you cannot distinguish between one Bitcoin and another. However, the regulators want financial institutions to do the opposite. They want to make everything and all money non-fungible so that they can meet their anti-money laundering goals, so that you can take and taint certain forms of money. They like to call them the proceeds of crime, and the proceeds of crime, financial institutions need to differentiate between money and not treat it as equal, much like cash is treated as equal. So fungible just simply means that there is no difference between them. And cryptocurrencies like Bitcoin and Ethereum, with the exception of when these addresses get blacklisted by sanctions lists and things like that, they move slightly more from fungible to non-fungible. So non-fungibility and why we have these NFTs is where you truly distinguish between a token, cryptocurrency. There's so much jargon here, but the tokens are essentially something that exists on a blockchain and is designed to represent something that's very different from any other token. So unlike Ethereum or Bitcoin, if you own one ETH or you own one Bitcoin, then in theory, you don't distinguish between one ETH and one Bitcoin, although there is a traceability in the blockchain, and therefore you can trace back whether it came from certain dark markets or various other things. It's just why they're not so great for committing crime and various other things like that, because you create a permanently immutable record for as long as that blockchain actually exists. But non-fungible tokens are designed to be exactly that, non-fungible. You want to distinguish between one token and another so that you can prove certain properties. And at the moment, we are in a non-fungible token bubble, no doubt. We're in a wave. It's the latest thing that everybody's talking about. The reason for that is because they exist for as long as that blockchain exists. So when you think about, for example, when you purchase all of your music, for example, from a service like iTunes, then really it relies upon that company continuing to provide the service. If you purchase some of these virtual goods, which people pay a lot of money for in some of these games, then they can only exist as long as the game exists. However, with non-fungible tokens, the advantage of this is you can take that token out of the game and it can outlive that particular game or that particular centralized company because they exist for as long as that particular blockchain exists. And so this is why they're often used at the moment in games and for various other industries. But what's interesting is that it's a really old concept. Non-fungible tokens have been debated in the Bitcoin sphere ever since really 2012 was when I remember the first conversations coming around. And that was the time when Bitcoin was coming to be and people were creating protocols. And one of the first projects where non-fungible tokens suddenly became a conversation was at the advent of something called a colored coin. And a colored coin was designed to take Bitcoin and color some of those coins using various different technology. And I don't want to go into the crux of the technology because that's pretty boring. Leave that one for another conversation. But by coloring these coins, you turned a fungible Bitcoin into a non-fungible Bitcoin. And it existed. They created technology where you could create these non-fungible tokens on top of Bitcoin. Now, at the time, the conversation and the rage was all around how you could have stock markets that exist on top of Bitcoin and financial products that exist on top of Bitcoin. And this really began the whole conversation around the phrase that came later, which is smart contracts. And smart contracts were where you took the programmability of the programmable money and you could enforce certain rules into the code, which now, all these years later, has now become the advent of this whole decentralized finance, DeFi craze that we're experiencing right now. So colored coins were the early ones. And we had these different conversations. And one of the community members, Vitalik Buterin, was working on the colored coin project and eventually ended up creating the Ethereum blockchain in order to try and optimize a new blockchain that could come and make it more possible. And the whole Ethereum Foundation, all the different people that were involved, including Charles Hodgkinson, for example, and many other people that you hear about in the Ethereum space. And certain standards, when Ethereum started to come into existence, it had certain scalability optimizations that would initially make it very cheap, but inevitably, as a blockchain becomes very popular, it becomes more expensive, like it is right now in the case of Ethereum, where you have to pay pretty large fees in order to execute some of these smart contracts, participate in the decentralized finance sector, and mint and mine some of these non-fungible tokens. So certain standards came, like you may have heard of some of the fungible standards like ERC20. And in the case of non-fungible tokens, people started creating them in different, like ERC 721. And there's been many, many different types. I don't want to go geeky into the technology. There's many other people. But now we have reached a definite bubble phase. So I've been involved in many different bubbles in the cryptocurrency industry. One of the very first one was when it went from Bitcoin to many, many different altcoins, and CoinMarketCap came around and used to have about 5 or 10 different flavors of the month of alternative tokens. And everyone would come along and say, oh, it's going to kill Bitcoin. It can do it faster, cheaper, better governance. and then they try and improve upon it, and you get these bubbles and waves of alternatives to Bitcoin. And inevitably, every year, the top 10 or the top 20 would change as a new flavor of the month would come along. The next real craze after the altcoin craze was the ICO one, which is where people were creating many of these fungible tokens that were connected to some kind of platform. Bank to the Future is an example. In banktothefuture.com, we wanted to create a token whereby we could reward our investors for building a portfolio. They could get priority access to deals because whenever we launch a new deal, for example, we've got Celsius coming up and we've got thousands of investors that are all trying to onboard. And as I said and gave mentioned at the beginning of this presentation, we are oversubscribed all the time. So we have a waiting list for investors trying to get into such deals. This is example. So we decided to use a fungible token, which is the Bank to the Future token. You can purchase it on certain cryptocurrency exchanges. If you ever want to know, just go to CoinMarketCap, type in the token you're looking at, like BFT is the ticker for the Bank to the Future token. You can click on the markets page and you can find out the different exchanges that you can purchase these from, and also decentralized exchanges like Uniswap, which is now becoming billions and billions of volume and is already trading more and more than some of these centralized exchanges, which is an incredible achievement that has happened last year and over the last years. Then after that, we had the DeFi craze, which we're still in right now, and the non-fungible token is the latest flavor of the month in crypto. So what are people doing with these non-fungible tokens right now? Well, many artists are seeing this as an opportunity to suck as much money as they can from the cryptocurrency wealth that has been generated by many people in the industry. So now the industry has approached and almost touched upon that $2 trillion space, is fluctuating up and down, but it's past the $1 trillion mark. There has been an incredible amount of wealth generated. And some people are taking some of that wealth and paying up to $69 million for artists that are creating images and photos of their art and making non-fungible tokens where you can prove on the blockchain that it was came from this issuer, the original artist, and also is a one-off piece, or however they set up the non-fungible tokens. And some people are purchasing these non-fungible tokens either because they've got just too much money, or they think they can flip them for more in the future, or they genuinely are interested in these collector's pieces. Now, for me, the art industry is interesting. And I think that the amount of brain power that's being put into these different non-fungible tokens and innovating the industry. But what we tend to see after each of these bubbles that we've experienced is that you have incredible price movements. The gamblers out there, they put all their money into one of these, whatever the latest flavor of the month is, and that either flip a token, whether it's going to crash or whether it's going to do well. And if they generate some of the types of returns that sometimes can be generated, then it depends whether they continue to hold those or not. As the pump moves to a dump, you tend to get 90% corrections when the pump does move to a dump. And then at the end of it, just like the dot-com boom and bust, you end up having a couple of gems. Compare it to the Amazons and the Googles that came out of the dot-com boom and bust. 90% of them were just trash, where people got caught up in the bubble. And I think we're seeing similar things. But I do also believe that there will be some gems that come out of that and genuinely produce that. So I'm going to share a bit more on what type of gems I'm looking for. But at the moment, when you think of non-fungible tokens, you're mainly thinking about artists that are taking some of their art and they're finding this opportunity to captively take their piece of some of the crypto wealth by selling that art a non-fungible token. You're seeing a lot of it in the gaming sector as well. I am not a gamer by any means. I do remember in my childhood playing games like I was before the Super Nintendo, the Nintendo NES, when we were playing Legend of Zelda and Super Mario. But my gaming stint really left there, and maybe I had a brief craze with some iPhone apps like Solitaire and Big Angry, was it Angry Birds or whatever it may be, but it never lasted. I was always too busy for it. But there are a ginormous gaming industry out there. So many different applications are now taking some of these non-fungible tokens, creating platforms for these games, and then people are able to take those tokens out of the game so that they're not reliant just upon the game existing, or they can move that into the future and pay it across games. So it's creating these interesting platforms of interoperability between these different games, between these different marketplaces. And also people are using them, as always in crypto, for rampant speculation. Some of them are actually involved in virtual worlds. In the book, Bank to the Future, I did a whole chapter on how people are living, and this was over a decade ago, and trading different virtual worlds. And at that time, all of the currencies that existed within these virtual worlds were centralized and depended upon those platforms continuing to exist. Now, many of them didn't continue to exist, but now with these non-fungible tokens, they can be taken out of that. Now, for me, I'm not so interested in art, gaming, and virtual worlds. You might be, but for me, where I think this becomes really interesting eventually is where we were looking at this in the original place almost a decade ago when we were talking about colored coins, is the impacts that they can eventually have on traditional finance, and making it whereby eventually, like the promise of things like security tokens, where rather than a market being listed, just, for example, a company would go public and they would just be listed on the New York Stock Exchange or the London Stock Exchange or the Tokyo Stock Exchange. And these different companies and stock exchange will pitch why you should be in theirs, on their stock market. Imagine a world when it becomes interoperable, where you can take your assets off the New York Stock Exchange, put them onto the Tokyo Stock Exchange, and then even move them into decentralized exchanges based upon your belief and your ideology and how they treat you. This can really drive competition in the financial markets, which is where we're currently seeing with many of that right now. It also has a big downside, which is that because anyone can create these non-fungible tokens, it's actually pretty tricky for the average person to know whether the issuer is actually the real issuer. So imagine all of these companies that have copyright and they're trying to take some of their collectible items, as we're seeing with artists right now, from musicians to artists that are producing music and artists that are producing art, and they're trying to digitize it. And because in the digital realm, it can be copied and replicated, they're using these non-fungible tokens, but then people are going out and creating Superman memes and putting them on these non-fungible tokens. And then the owners of those copyrights and those trademarks are going out and trying to enforce it. But people are looking on blockchains, they're finding it very hard to distinguish between the original issuers that are issuing those non-fungible tokens versus the scammers. And then these scammers are issuing these non-fungible tokens, impersonating, trying to be the original owners of the intellectual property. And then they're even creating fake trades where they issue the token, they try to purchase it with ETH. You can see the trading activity on the blockchain, and people are getting fooled into investing in these non-fungible tokens, thinking that there might be the opportunity to flip them, buy them, sell them, and move on. So really it is complete buyer beware. And in crypto, there has always been the opportunity to make life-changing of returns, but you need to appreciate, and I've seen this so many times, that just allocate if you want to participate. Firstly, there's much easier and simpler ways of making sustainable wealth in the industry. That's what I covered in retirementplanb.com, where I talked about the 4-part video series, and I talked about the strategies and really following an investment approach. But if you want to gamble, then feel free to gamble. But please don't think that you're trying to take all of your wealth and trying to hit a big win and put your chips on there, because most national lottery winners, even when they win, 80% of them end up back poor in their original state because they were just flicking, they were playing chips, they were gambling. Feel free to gamble. There's life-changing returns to be made, but only do it with the percentage of your fun portfolio that you've allocated towards doing such gains. Always remember that you need to get the structures right. And the more you trade, the more you engage in these different areas, you're creating taxable events for yourself. And if you haven't been declaring those taxes, then there is a real government crackdown, as I've covered in previous videos, that you need to be aware of. But essentially, these tokens are permanent. So these scammers are creating these permanent, immutable things that can't be replicated in that. And they cannot be counterfeited, and they are provably owned by the issuers, but then it's very hard to actually connect those issuers. And this has always been the challenge all along, ever since the idea was conceived, that when you take the blockchain world and you try to add it to certain assets, so many people have tried to launch, gold-backed tokens and dollar-backed tokens and stable coins and things that we've covered in previous videos. There's always been a challenge in taking the physical world where you don't have the ultra transparency and connecting it, which is why oracles and different protocols are existing in order to try and solve those problems. And I do believe that these interesting problems probably do get solved in the end, but they have not been solved at this stage. And so therefore, when you connect these two, many people think that blockchain has improved those there, but really the use case of a blockchain has always been immutability in an environment where you have censorship and you need to prove scarcity. And so the reason that people are investing in these non-fungible tokens right now is because the provability of the scarcity, and they're looking to flip it, thinking that they're one of the only owners in these digital worlds. So I do expect a regulatory crackdown, and it's when you start combining these with various other decentralized finance products. So what tends to happen in these cycles of innovation is people stretch it one step further, because you've got the whole world innovating in an open source, decentralized environment and putting incredible brain power to these things. You tend to have, iterations that move very, very quickly. So now people are creating decentralized exchanges for these non-fungible tokens. They obviously exist. And then they're creating innovation by combining it with DeFi, whereby you can lock up your non-fungible token and you can take out a loan against your non-fungible token. And this is where the danger really begins. So you can lock up, and I'm all for this equity-based, locked-up-based innovation, but be aware that the collateralized loans means that if there are a significant correction in the price, your non-fungible token gets sold. And if you could end up selling it for a ginormous loss, if there is a sudden movement when we get the bear market that inevitably follows in some of these pumps and dumps, as more and more people get forced into dumping, and then you can end up in interesting scenarios, which I think is inevitably around the corner. So to answer the original question of this is, are we in a non-fungible token bubble? Absolutely, no doubt in my mind, we are in a NFT bubble, and 90% of all this stuff will be filtered out. People will lose their shirt. These dumps will happen. There will be an incredible amount of scammers, as there always is in every cycle. But at the end of it, I do think you will have the small percentage of innovation that comes through and can potentially work on that original vision that got me originally involved in this industry. And that is that the future of finance looks very different from the past. And when you end up plugging these different products together as they grow more and more robust, you end up in scenarios where each and every financial product gets disrupted one product at a time. So while everyone is thinking art and games and all these different areas, in the end, I'm thinking about financial markets and the different types of products that will come from this that can be perform things in a way that could never have been performed before. And that's where I think this goes in the end. And that's why I'm also investing long-term in the equity of the company. So in the final way, how do I get exposure to this stuff without having to be completely crazy? Well, I found that the best way of benefiting from all these crazy trends that happen in such a rapid pace is allow the exchanges to do it all. So the exchanges make money out of all of these pumps, out of all of these dumps, and you can get exposure to it long term by owning the equity in many of these exchanges. And so that's how I think about the simple way of being involved. And that's essentially why we are very oversubscribed at banktothefuture.com, because we've been producing these opportunities for our qualifying investors for over a decade now as the longest standing company in the Bitcoin sector and the world's first crypto securities business. And so you can buy those in a number of ways. Either an exchange comes to us and we have primary market listings. Last week, we covered how to invest in companies like Coinbase before they are worth 100 billion rather than waiting for the public markets. And we have investors on our secondary market that are looking to sell some of their equity, and it can be matched up with other qualifying investors on the platform. And so, yes, as I said, at the moment, it's taking quite a long time to get an account with banktothefuture.com. And so, the benefits of investing in these exchanges is they have full-time teams designed to be on top of all this stuff. And even when the market crashes, the revenue of those exchanges increases because they make money out of volatility, new trends. And that's why they have been some of the highest performing investments in our industry. And also remember that some of these non-fungible tokens, when the market really goes, there will be no liquidity, no real pricing mechanism. There will be some incredible challenges in that. So it's always buyer beware. We are in an NFT bubble. Be careful of all the people that are telling you this is the next big thing. You need to get in now. We've seen all this before. We've seen these cycles. And really, for those that want to take a percentage of their investable, portfolio and put it into gambling, make sure it's in the gambling bucket. But the vast majority is looking at sustainable long-term wealth. And the returns can be so great in this industry that sometimes you ask yourself, why are you taking all of these crazy risks? It's because you're gambling, you're trying to get rich quick, faster, when actually, if you just put some time into putting together a financial plan like we do with our retirement plan B customers, you realize that you don't have to take all of these excessive risks. And then it's all about preserving your wealth and making sure it's tax efficient and various other things. So I hope you enjoyed that. That brings us to the end of this segment. How did I do? We are 35 minutes. So we're going to do 25 minutes of questions and answers. I'm going to grab a quick water. Now, while I take that break, do me a favor. If you enjoyed this content, we need your support in hitting that like button. I don't want to beg you for a like, but if you've enjoyed the content, do us that favor, because YouTube ranks these videos based upon how many people liked it. And also, if you're not a subscriber, to stay on top of this market, make sure you subscribe, hit the bell symbol, hit all, and YouTube will notify you. And the final thing before I go through the questions and take my quick water break, each and every day I've been doing a quick 5-10 minute 5-minute broadcast on Twitter. So follow me at Simon Dixon Twit. And I've been doing a 90-day challenge at the moment. And today I was showing how baggy my t-shirt has become after 38, 37 days of working out each and every day. I'm going to be doing it for 90 days. And as a reward, I cover one topic quickly. So rather than the 1 hour long form content, I'll just rack up my phone, cover that content. So make sure you're following those on Twitter if you are very busy and you don't make it all the way through these longer form AMAs. So Azad, let's move over to the Slido board. And in 25 minutes, we're going to take as many questions we can, starting with the top. You can upvote those questions or you can ask your own question. It's sli.do, enter into the box SD6, and that will take you over to the board that Azad is seeing, or you can click the link in the live chat description, or hit that QR code that's going to pop up. I'm going to take a quick order. Tell me what the first question is, Azad.
Okay, the first question from Edward. Should I transfer my Bitcoin from a cold storage wallet to an interest earning account? Is it safe?
The answer to that question is you are exchanging one risk for another risk. And so this is all about risk management. The biggest problem that I see with people in crypto and investing in general is they think it's all about taking all of their funds and moving all of it over to one thing. This is how you blow up portfolios. So what people do is they tend to take the extremes. They say something like, you have to hold all of your Bitcoin in cold storage, not your keys, not your coins, was the phrase Andreas came up with. And so therefore they take that as a religion and they stick to that. The challenge is that you're then dependent upon one methodology of storing. And if that methodology goes wrong, you lose everything. I like to diversify across cold storage and owning the private key because there is the risk of your personal security setup. And obviously I've invested a lot of time in personal security setup. But then I want to protect myself from messing that one up by having some with a custodian as a hedge against losing everything. Am I into trying to get some yield? Well, what I'm doing is I'm exchanging the risk of owning my own private key to the risk of lending it through that platform, which adds a different counterparty risks. The reason that you're receiving returns is because you're taking additional risks that you don't take when you hold the private key. Now, at Retirement Plan B, we talk about a strategy and a portfolio approach. And so I'm happy taking some of those and receiving returns and trying to generate a compounded interest network effect so that I can compound, but I'm not certainly going to take all of them and hold them there because then I'm dependent and that whole thing can blow up. And so I like to model it in terms of risk management rather than taking everything across. Next question.
Question is 2013 Trent McConaughey, now Ocean Protocol, built Ascribe.io, a platform for IP on the blockchain, the first NFT platform. It was built on Bitcoin and quite successful, but it wasn't scalable. Will NFTs ever be possible and scalable on Bitcoin?
I do believe that eventually NFTs will be built and will be scalable on top of Bitcoin as the base layer. We haven't had many of those yet, but there are many projects trying to achieve this right now. So you've got Liquid by Blockstream, you've got people that are building on top of the Lightning Network, which is adding additional privacy and scalability. But these are all trade-offs and different things. But I'm an investor in different projects in this space. But yes, I do believe we will eventually have non-fungible tokens. We already have them, but will they be scalable? Well, it depends upon the adoption of some of these different technologies, which I do think we will get to eventually.
Okay, question from Anonymous. Hi, Simon. My father had a photography business before he passed away. I have all the archived photos. Would it be a good idea to sell the photos as NFTs? They are of famous people, some alive, some dead. Worthy of a business opportunity?
So my personal thing is that I'm not a business opportunist. My whole life, I have dedicated myself to one mission, and my experience is that people that chase opportunities tend to go from one opportunity to another opportunity to another opportunity. 1 minute they're doing flipping real estate, the other they're launching tokens, the other they're trying to do stock market trading, the other they're trying to look for the latest trend. My personal belief is that you need to stick to something that is in line with your principles, that wakes you up each and every morning, and you do these things before they're actually trends. And then one day, if that is right, then you might catch a trend when you put yourself in a position where luck finds you. But to me, short-term opportunities is just not my style. It's not the way I do things. I don't try and jump into whatever's trending at the moment. However, if you as an individual would like to, if this lights you up, this is your thought about taking, something that's very near and dear to you, and putting it into a legacy, and then seeing if you can sell those and make some money at the same time, then maybe that's right for you. And the NFT, but do remember that you could end up, that's exactly what many artists are doing right now. They're looking to jump into this bull market, get the opportunity to grab as much money out of the crypto market, people, while this trend actually lasts. So if you want to take advantage of that opportunity, then it's great to do it into the bull market. That's might be something that you do. But my advice around short-term opportunities is most people fail because they're always jumping onto these short-term trends, and they end up jumping into the next thing, and they end up opportunity seeking forever into whatever's someone's trying to sell you is the next hottest thing. That's my advice around that. I know it's a slightly different answer to that question. But you can certainly do that. This is what NFTs were designed for, if you want to do that.
Simon, please chat a little about the recent rise in BFT. This should be a wonderful story for you. It is for those of us that have it.
So the Bank to the Future token has increased in value over 1,000% over the last few months. And there's a number of reasons for that. The first is that as we are very, very oversubscribed at Bank to the Future, and we have a large waiting list of clients trying to open those accounts, and we've got a good number of deals that are coming up. And as more and more people are starting to realize returns, so with companies like Coinbase going up to $100 billion valuation, and early investors getting exposure to such assets at a much earlier stage, more and more people and more wealth has been generated. So there's more and more qualifying investors. And we decided this year to just focus on our retirement plan B customers. And we've got so many people that are on the waiting list to create accounts that many people have been buying the Bank to the Future token, depositing them onto their accounts, so that when these new deals come out, they get a 48-hour head start. At the same time, the volume on our secondary market has significantly increased because it's one of the only places where people can build a portfolio in crypto exchanges. So companies like Kraken and Bitfinex, through our special structure, people that want to purchase those companies, they can get a discounted trading fees if they pay it in the Bank to the Future token. So people are going and buying those Bank to the Future tokens and using them to pay their trading fees to get discounts on that. And a network effect is really starting to build. At the same time, our retirement plan B has driven an incredible educational wave where people are finally starting to really understand how to build long-term sustainable wealth. And they're not just trading, jumping from opportunities to trend, ending up getting themselves in tax situations because they're thinking about this long-term. And people, I guess, are speculating on the next wave of what we'll be doing with the Bank to the Future token as we launch more and more products into the retirement plan B brand. And just in general, the market's up, the bull market's up as well. And the token was launched at the end of a bear market, so it had a really big pump and then a dumping wave into the bear market. But now people are really starting to use the utility of what the token was designed for in the first place. That's it.
A question from an RPB member. How does Janet Yellen's recent announcement in increased tax on global corporations going after tax havens affect the SPC umbrella in the proposed RPB retirement plan?
So the governments have been going after offshore structures for an awful long time. And they constantly tend to change laws in order to try and do that. But we are launching a structure whereby the main benefits are that you can defer some of that tax, and we put together legal tax structures. So if you want to do that in some of your retirement plans, and I don't think that there's anything new here. Basically, they are going after what the wealthiest 1% have been doing for decades and decades and decades. And they've been closing many of those loopholes, and many of those are factored into how we design our structures. But again, tax laws change, legislation changes, but it's based upon some of the sound principles of what the wealthiest 1% are doing and have been doing for an awful long time. And we make sure we do it legally and compliantly and give you those structures. So at this stage, no additional changes. In Retirement Plan B, we've given you the different rules that you need to be aware of and you need to analyze from your local jurisdictions. And we continue to release more and more opinions and legal opinions as we start to roll out that portfolio builder for those that actually want to implement it. We'll be giving more and more details as we progress.
Question from Anonymous. Does investing in Bank to the Future token expose you to the Coinbase listing? Do you predict the price soar, then crash, or crash, then soar? Whose trajectory might be similar? Amazon, Tesla, etc.
So the Bank to the Future token is not a security. It's not an investment. It doesn't give you exposure to companies like Coinbase. If you want exposure to companies like Coinbase, then you have to buy their shares, not the Bank to the Future token. The Bank to the Future token is designed for people that want to use the token. And so they can use it for getting a 50% discounted trading fee on the Bank to the Future secondary market, or they can use it to get 48-hour head start on deals, and they can use it as a rewards and loyalty program. Now, obviously, as more people start to demand that service and use the utility, then we have seen that over time, then more people buy it, then it changes the supply and demand. And so you get increases in prices that can happen. But the Bank to the Future token was not designed as a security. If you want to make investments, then equity is the tool and mechanism for doing that on banktothefuture.com.
Question from Anonymous. Simon, do you currently own any NFT? And if not, what NFT would interest you strictly from a fund-based point of view?
I don't own any NFTs at this stage. And for me, until it starts to interact with financial products and prove itself a bit more, I am more interested in investing in the platforms rather than the NFTs itself. For me, I've always tried to invest in the ecosystem rather than the individual tokens personally. And so I do indirect exposure through owning equity in crypto exchanges that will be trading many of these NFTs, and companies that have built platforms. So for example, at the moment, one of the deals we did on banktothefuture.com was a deal called, for example, Elysium. Elysium was co-founded by the FC Barcelona's Andreas Iniesta, that has, I think, like 72 million followers. And he partnered up with some technical developers and they launched a funding round on Bank to the Future for their platform, which allows many of these celebrities to engage through these non-fungible tokens. So through that, I like to invest in the platforms rather than the individual NFTs themselves. I'm not saying that I won't do that in the future, because I never say never, but my investment strategy is pretty clear, and I do have a pot reserved for fun and games and gambling and those types of things. And so maybe some NFTs will exist there in the future, but at the moment, I'm not participating. Nothing's really caught my industry, and I'm certainly not a trader, and I see it all as short-term trends at the moment. Trading creates all sorts of problems that I don't want to be going down. So yeah.
A question from Marvin. Are you investing in new NFT projects like ERN Super? I guess you've just answered.
Answer that one. Yeah, I'm not going to be making individual investments. My particular strategy is diversification, and I can share about some of the things that I've been done, and I'll always disclose wherever I can where I'm a shareholder. Sometimes I forget because I'm a shareholder in over 100 different companies in the industry through Bank to the Future, but I always try and disclose those. So if you ever hear me talking about something, it's very important to me to disclose whether I have an interest in that as well.
Okay, Eric asks, is MMT a danger for Bitcoin?
I do not think so. I think modern monetary theory actually strengthens the need for Bitcoin, because the use case of Bitcoin is and I've been saying this ever since speaking at the very first Bitcoin conference in Prague. In the book Bank to the Future and Modern Monetary Theory that I talked about, it wasn't called that at the time. But I think it makes fiat currency more sustainable because you take away the power to create money from the private banks and you remove the debt-based Ponzi scheme depending on how it's designed. But it significantly reduces the free markets, market mechanisms. It makes much bigger governments, and it produces more power to governments, and therefore I think it's a net negative on privacy, freedom, human rights. But that's what you need to do to try and drive some kind of sustainability in the fiat Ponzi scheme, the world's largest regulated Ponzi scheme called fiat money today. But how does that affect Bitcoin? Well, Bitcoin is a function of people wanting to own their own money, which you won't be able to do with central bank digital currencies and modern monetary theory, and people wanting to spend their own money. And what Bitcoin does is it takes the financial institution out of the middle, unless you use a financial institution, in which case they have to comply with all the same rules as a bank and any other financial institution, and implement anti-money laundering regulations, which prevent people being able to spend their money. With Bitcoin, it brings that back to peer-to-peer and law enforcement rather than the financial institution. And the counterforce against excessive money creation. I think modern monetary theory will create more money and therefore enhance the utility of Bitcoin as a fixed supply that can't be changed. Just checking in on the time, so we've got another 5 minutes.
Question from Jordan: which stable coins are backed by a trust structure?
So there are several different stable coins that use trust structures. TUSD, TrueUSD, Upstore Standard have an interesting structure. And so those are the main ones. And I haven't dived deeply into some of the other structures, but those are the main two that I have looked at, and have a trust structure to try and protect, make some additional protections, as I discussed in the stablecoin and video in previous videos on my YouTube channel.
Question from Bob: do you ever spend time out of the echo chambers to get clarity on your investment ideas?
This is something I'm focusing quite a lot on at the moment. So my public commitment to health that I've been doing at the moment was a 90-day challenge that I set myself, where each and every morning when I wake up, rather than going straight to my phone and checking prices and markets, and going straight to work and then not going and not stopping until midnight, I decided that I want to focus on other things so that I can increase my energy levels. So this is my release at the moment, which is each and every morning I go straight into the workout and focusing on my health and fitness at the moment. And I'm making sure that I try and keep that up for 90 days. Yes, I do take a lot of time out to try and make sure that I'm looking at non-financial market stuff. But it's a very tricky thing for me to do. And I have to focus a lot and really, figure out how to put more balance into my life. And that's something that's a mission at the moment. I'm starting one step at a time with the health challenge. And I'm finding that that's taken me to deeper places. That I think at the moment.
Question from Anonymous, 60 years old, Bitcoin happy, is Bank to the Future for me?
So banktothefuture.com is for people that want to build a long-term, high-risk, high-return investment. And they want to build a portfolio. And one of the things that we're doing is initially at the moment, you can build an equity portfolio. You can invest in and diversify across the industry. So rather than just having Bitcoin exposure, you can normalize out some of those returns, have long-term, high-risk, high-return investments. And at the same time, we're launching our Retirement Plan B portfolio builder product, which automates the process of implementing the Retirement Plan B that I shared in the free 4-part video series. And we've been working for 14 weeks with 500 clients to build their retirement plan Bs. So if that fits in, so what I can't do is in Retirement Plan B coaching program, we give people all the spreadsheets to plan out their finances and implement a lot of traditional financial planning. But I don't know your personal situation. While you are 60, while you own everything in Bitcoin, I don't know what your upcoming expenses are like. I don't know what your inheritance planning is like. I don't know what your tax liabilities are like. I don't know whether you need to pay for a college fund for your grandchildren or whatever it is in your life. So that's where traditional financial planners come in. And I'm not able to give, although I have done my financial planning certificates in the past, I'm currently not a registered financial advisor. And I don't do individualized financial advice. But if I were, I wouldn't dream of just giving generalized financial advice, because it 100% depends upon understanding a lot about different types of things, and it's bespoke to the individual. So what we did at the online coaching program is give people the tools so that they can start diagnosing themselves and complete the spreadsheets, understand their financial situation, do some financial modeling around what their retirements could look like, and then work backwards into the strategies and what types of mixes they need to do, and then making sure they do it tax efficient and in a way where they can pass it on if they when everybody inevitably passes away. So it's a bit more planning until you start looking at the whole investment side.
Okay, room for one more question.
Okay, let's make this the last one.
Question from Bob. I have NFT in crypto domains. What do you think about this space?
I think we just covered the whole video on what we think about non-fungible tokens. So if you asked that question before watching this video, rewind to the beginning of this. In the first segment, I gave you my whole thoughts on non-fungible tokens. So that's a great place to end now. As I said, if you enjoyed this video, do me a favor. Hit that like button. It's a free way to support the channel. We need YouTube to rank us higher. We've had YouTube where people started giving those likes, and we had like 500,000 views on some of the more popular videos. And then when people didn't add the like button, even though they enjoyed it just as much, YouTube didn't start ranking us, and so we get a lot less views. So really appreciate all those likes. You know, the whole goal of this is to make sure that many people are prepared for what comes ahead in the financial markets. And we really have a mission to make sure that people are prepared for what comes next. So thank you. And always remember, if you haven't subscribed already, hit that subscribe button, hit the bell symbol, hit all. YouTube will notify you. If you'd like to get on the waiting list for the next round of Retirement Plan B online coaching program, then head over to retirementplanb.com/sign_up. Put your name, email in there, and you will be added to the waiting list. You can be on that waiting list. We only can take on a maximum of 500 people at a time. If you want the free video series, retirementplanb.com. And if you'd like a free digital copy of the book, Bank to the Future, head over to retirementplanb.com/book. And remember, if you are going to be looking to build a portfolio of high risk, high return, diversified companies in the industry, we do have a big waiting list for investors at the moment. So complete your verification, complete your certification, and over the coming weeks, we'll be now announcing the next set of products at Bank to the Future for those looking to diversify and build and protect their wealth in this industry. So always remember, you are alive at one of the most interesting and exciting times in financial history. Many people got hurt. Many people did really well. I want to make sure that you are on the right side of that change, and we will see you this time next week, or head over to Twitter at Simon Dixon Twit, and I'll be giving my daily updates for the next 90 days minus the 37 we've already done. Peace, over and out. As long, could you end the broadcast? I'm not quite sure how to do that.